Got so many shades they thought I had a lazy eye. Shorty roll me smooth as my Mercedes ride. No love, cry when only babies die. And when I go, that casket better cost 100,000.
So over the last week, there has been the biggest changes in the prop firm space, the trading space, and crazy shit happening around the world that is completely out of your control. However, what is in your control is how much money you make and how you make it and how fast it enters your bank account. This is the step-by-step process, no bullshit guide on how you can take a $20,000 payout minimum with Apex. Here you go. Slide number 1. This is the new updated rules on Apex, and this is how we are going to approach it so you can guarantee yourself profit into your bank account. Cash, okay? Wave it around, smell it, put it on your desk. It's cash, okay? This is how you're going to do it, and I'm going to show you and give you the model that you're going to execute that is going to give you this result. And if you're not competent enough to execute the model by yourself, I'm doing a free trial. You can watch me trade live for free. You can learn my model. You can ask me questions. You can get access to all of the pre-recorded free content which is inside of the group. All of the information that I've spent years and years and years developing and understanding and learning and finding myself fishing for information is there for you. In the description of this video, a free trial. You can watch me for free. There's also a free Discord. Get in both. We have the premium group, which is free, and the actual free group, which is also free. Okay, nothing. Only upside potential for yourself. Apex's rules. This is what you do. You have a $3,000 profit target. Passing the account is piss easy. You either send it on CPI or you do the other method, which is inside the Discord. Hence why you got to be in there. Hence why it's free. Okay, because the other method I can't actually speak about. Otherwise, I'll be off the space of the map with prop firms. Okay, so it is there. Can't talk about it on YouTube. But CPI, we do it every month. We did it the month before last. We did it this month. You know, we've done it every single month. We passed over 500 accounts. You know, the last CPI we passed 300 accounts. CPI before another 300 accounts. And then people also rinsing the other method that I can't talk about. Okay, so when it comes to the performance account, basically the way it works, you have to click this little drop down button, but I'll tell you specifically what it is because it's very, very simple. End of day drawdown, $2,000, a 50% consistency, which is very, very vital. The consistency rule is what makes this and breaks this. This is so vital, okay? So essentially what you're going to be doing, I'm going to take you to step 1. One account, end of day drawdown, 50k Tradeovate account is going to cost you $128.55 after activation. So each account is obviously $29. Now passing the account and buying the accounts is nothing. Your main cost is actually when you pass it, which is very good for you as a trader, as there's no actual substantial financial risk to buying the account and then you blow it, okay, let's buy it again, because you're paying the majority of the account once you pass, which is very, very good. So each account's going to cost you $128.55. Sometimes a little less, sometimes a little bit more. Apex is always running a sale, so you're always going to get roughly around this price per account. Okay, so what you're going to do, let's say you go for 5 accounts, you can go for 20 accounts. We're going to talk about liquidity and how much money you should actually have in the bank to start this and what you should be aiming for, okay? Because a lot of you are going balls deep in buying loads of accounts and you got no money left in the bank, okay? So that's not what you want to do. So risk per trade, you're going to be risking $500 a trade. You're thinking, Milo, that is way too much on a 2k drawdown. Absolutely not. This is how it works, okay? The risk to reward to what you're paying to what you're receiving as a payout is exponential. This is what you're going to be doing. I'm not overhyping. I'm telling you the truth. If you execute this right, you are going to have cash that you can sniff on your desk. Minus 4R blows your account, okay? Blown. So, for example, trading my model from what I've experienced over the last 3.5 years and also plus extensive backtesting for over thousands of hours and thousands of trades that I've executed, okay? My worst month recorded to this date is minus 4R, minus 5R. That's the absolute worst. It doesn't get worse than that. Now, for example, if you have a month where you have minus 4R, or you go from a month to the start of the next and then you get minus 4R, cool, the accounts are blown. That's round 1. Then you're going to reacquire your accounts. And what you're going to do, you're going to trade them normally, risking 500 a trade, and there will come a point through the year, countless points, not just one point. There will be a month where you hit 14, 16R. There will also be a month when you hit classic 8Rs, 10Rs, 6Rs. And guess what? Whenever you hit 6R, your account's up $3,000, which means you can take from 3,000, you'll meet the 50% consistency rule, you're going to meet the 5 profitable trading days, because to get there, you would have already had 5 winning days anyway, okay? So basically what this means is that you take 1,000 from each account. If you have 5 accounts, that'll be a $5,000 payout, and you're still going to have the accounts. So you can go for another payout. If you have one more winning trade, and then you just get those 5 winning days, boom, there you go. Another payout, another $5,000. If you got 20 accounts, this is where we talk $20,000, okay? So this basically means is that 6R lands you $20,000. And then every 2R after that is 20,000, 20,000, 20,000. And this can go on. As far as your winning streak goes, you get fucking paid out. And your payouts can go from 20 to 40,000. For example, on your second payout, let's say you reach your first payout, which you will after 6R. Let's say the winning streak continues and it's a 14R month. You're going to get another 2R. So then your accounts are now back at 3,000, but you need the winning days. So you keep risking 500. You're risking 500, risking 500, risking 500, so on and so forth. Your account could run up to another 1,000, another 1,000, another 1,000. Then you hit the winning days. Okay, cool. You're going to take max payout, 2K times 20, 40,000. Okay, so now you're up 60,000 from what you spent. Okay, we're going to get into this in the next slide. So hopefully this is starting to make sense. 20 accounts, you should get 20,000 cold hard cash in the bank minimum. Okay, I tell you guys the ins and outs. I don't fuck around on YouTube. I give you guys what you need to know and what you need to actually know. I'm not trying to sell you shit on YouTube. I'm giving you a free trial. You can watch me trade live. Everything is there for you to succeed. I'm the only one doing this. I speak with passion because I fucking love helping you guys. I've met some of you in person and it's amazing. I see smiles on people's faces that never had a smile before and it's unbelievable. I've changed people's lives and people call me, they text me, they meet me, and it's just unbelievable for what I can do, and it doesn't cost me nothing, just a little bit of knowledge, and it's truly amazing. I do love it. At the expense of prop firms, of course. Cash reserves is a must. Here we go, second slide. So we just skipped on. Next slide, cash reserves. Okay, so this idea of trading on Apex is that you are going to come a point through the year, 2, 3, 4 max really, but you are going to blow your accounts, okay? So this is why we have this here. Read this and I'm going to read it out to you. Do not, okay? Listen to this. You want to pull up your Bank of America, your Wells Fargo, or you want to pull up your, Barclays Bank, and you want to check how much money you got in there, okay? So do not drain the river/bank account on your first round. So if you're buying 5 accounts or you're buying 20 accounts, this is exactly how much you need in the bank. You need 4 rounds, okay? 4 bullets. You are not taking 1 shot at Donald Trump, okay? You're taking 4 shots because you're going to fucking hit, okay? So listen to this. If you're doing 5 accounts, it's going to cost you, after activation fee, $642.75, which is fucking nothing, right? Payout. Minimum $5,000. That's what you're going to get. You're paying 642. If you hit first round, your first shot, boom. You're a nice sniper, and price action, it gave you winning trades. Following the model, boom, 5,000, and it goes exponential. If you had another winning trade, etc., win streak continues, another 5, another 5, another 5. You could run it up to 20, So then you can, on the next round, now you got a little 5, you got a little 10 there. Then you can start saying, I want 15 accounts. I'm going to keep cycling 15, or you can do 20 from that point, So look, give yourself 4 rounds of cash reserve in the bank. So in your account, $2,571. That's 5 accounts. That's how much you need in the bank, and you can do 5 accounts, okay? So, for example, you pay $642.75. You've got your accounts. You trade the model. You risk 500, and you're in a losing streak. You lost 4R. The accounts are fucking blown. You do it again, okay? You trade. Okay, the account's blown. Worst fucking case. 3rd time through, the account's blown. Okay, so you're down actual cash of what you paid on the prop firm, like $1,500, and then you even got a 4th try, and this is not gonna happen. So I've given you like exponential, 0 fuck ups, okay? You can't really get to 4th round. It's not really possible. You're not going to have that big of a losing streak. It's like fucking impossible. So this is why we have this. It's so you guys actually get paid. This is what we do. We get cash, okay? So $2,571 in the bank. That's what we need for 5 accounts. 20 accounts. Cost $2,571 to start, okay? Just to start. That's round 1. Payout minimum 20,000. That's the fucking minimum, okay? And as we said, every 2 hour after your first payout, it can very easily ramp up to like 100k USD. So easily. It just starts getting silly, okay? Depends what time of year you're in. Depends what month is your exponential month. It depends how many months consecutive back to back that you have in a row. But it gets silly, okay? Listen to what I'm saying. I really hope you guys enjoy this video. I mean, I want some fucking likes on this video because this is a banger, okay? I'm also breaking down the model as well. Stay around, drop a comment what you want to see. We ain't playing around. Give yourself 4 rounds of cash reserve, same as any scenario. If you do 1 account, 2 accounts, 5, 10, 15, 20, it doesn't matter, okay? You need that in the bank. So your account and your bank, you must have $10,284 to the side. This is your apex reserve. So put it in a savings account, put it to the side. You know, 10k is obviously a little bit to some people starting off. So 20 accounts, you don't have to go for 20. So many people, they go balls deep, as I said, let's get 20 accounts, bro. No, 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 buddy. This is what you're going to be doing, okay? If you want the money, here you go, okay? Do not rush this shit. You're going to get paid. Too many of you guys, you rush 2023, you rush 24, you rush 25, and you're still cooked. This is how you uncook yourself, okay? I'm here to uncook yourself. Hopefully this makes sense, okay? It's just $500 risk per trade, aiming for a 2-to-1. You're making 1,000 a trade. Boom, boom, boom. You can do this live with us. Remember, it's in the description. It's fucking free. Free. $0. Now let's break down the model. Let's get straight into it. I'm going to show you guys the exact trade that I will take in front of you time and time and time and time again. I've been doing this for years. Let's get into it. All right, boom. Every single day, this is Trade Seller. I'm showing you a position that I've taken a little bit of time ago. I want to show you nice clean examples so you guys understand this to the T. You start on the 15-minute time frame, okay? And you're going to mark out the obvious levels. It doesn't even matter if it's London highs. It doesn't matter if it's previous day low, data lows. These levels are more high probability, of course, absolutely. But you want to mark out what's obvious. So, for example, horizontal ray, I'm marking out this low for price. I can see at 2 a.m. to 5 a.m. this is going to be London highs on the 15. Perfect. I'm marking out this low for price and I'm marking out this low. We're currently trading on Monday. Now this is the current Monday low. It's not London lows. Obviously you want to mark out for what it is. You can see this is London highs, okay? So I will mark this for what it is. I'll just simply write LDN highs. I don't know why it's in blue. I like it in black. I'll put it as bold, top right. There you go. And this is just going to be a point of sell side. Now, other points that you'd like to mark out is obviously data lows, New York open low, New York open high, and other areas in price that is going to have our overall interest. So for now, I'm really only interested between this range for price. We took London highs. I'm interested in sell side. So I'll leave these others blank for now. Whatever I mark out on NQ, what do? I mark it on ES. Let's make this London high a little bit more accurate, you know, bit of OCD. So you can see on ES, we're going to also look for London highs. So at 2 a.m. we put in the high. Now what's the current difference between the two assets that you can see, which is very, very obvious, occurring at London highs? What do you notice? I'll give you guys a few seconds. Okay, what do you think it is? It's going to be a bearish SMT on ES. Now, this is only a confluence to an already existing model. Do not over-exaggerate an SMT, okay? Doesn't really matter. It's just like a cherry on the top. The cake's already good, you know? I'm going to eat the cake anyway, whether the cherry's there or not. But when the cherry's there, it's just more aesthetically pleasing. And then this point of sell side, I'm just going to Command C and I'm going to Command V and paste it onto ES. Simple as that. Now, we have our levels marked out. We understand we have a sweep of buy side. We're going to be looking for shorts automatically. Now, so the only way we can actually look for shorts off the bat is if we have a bias. Let's have a look at the bias. We determine this based purely off imbalances, and we work down from the daily. We get a result for each one: 4 hour, hourly, 15, and 5. On the daily time frame, as of now, we're trading out of a daily bullish gap, which is bullish towards the next daily swing high or bearish gap. So that is bullish. We can look at the 4-hour time frame. On the 4-hour time frame, most recent trading is out of this 4-hour bearish gap. So we are bearish on the 4-hour time frame towards the next 4-hour swing low or bullish gap. So let's write this down. The daily is bullish. The 4-hour is bearish. The hourly time frame, let's take a look. Two things you need to know when using TradingView, if you don't already know this. When you're writing your bias or anything on the screen, so when you change time frames, it doesn't disappear. Click anchor, so then it's going to stay on your screen. Number 2, click this little button here where you split your screen into 2 and turn on interval. So when you switch time frames, it's going to switch time frames on both, so it saves you some time. Let's look at the hourly time frame. So on the hourly, we're currently trading out of an hourly bearish gap. We assume a gap is respected until disrespected. For example, if price closes above this bearish gap on the hourly closure, which will be in 13 minutes, then it's going to be bullish towards the next bearish gap or hourly high. Hopefully that makes sense. So as of now, we're going to be bearish. On the 15-minute time frame, we're going to take a little look. We're not trading out of a bullish gap, so we're not going to be bullish. And then on the 15 to the left, we're trading out of a bearish gap. So the bias is bearish towards this next bullish gap or low, whichever comes first. The bullish gap comes first. So the draw on the 15 right now is towards 349.50. So we're bearish. Hopefully that makes sense. On the 5-minute time frame, as you can see here, the bias is bearish. We're trading out of a 5-minute bearish gap, and the draw is going to be towards the next bullish imbalance or 5-minute swing low, whichever one comes first. So it's the same for each time frame, and the bias is towards here at 351.00 on the 5, towards this unfilled 5-minute bullish gap. So we're bearish. The overall bias, we lean towards the overall out of 5 as a fraction. What is the percentage, the decimal, that leans in one direction? Well, right here we have 4 out of 5, 80% bearish bias. from all time frames using intraday and higher time frame to get an overall directional bias for price. So now we're going to go down to the lower time frame. Okay, so this is very, very easy to do, and I suggest that you do backtest this as well. So as far as the Apex model and the way that we are approaching Apex to accumulate a lot of cash as far as payouts, I suggest you backtest this model. You tune in with me live, ask me questions, and I'm more than willing to answer questions. We do talks every single weekend answering questions, both whilst we're trading live and also on the weekend we do discussions. We have other chats. You can chat with experienced members. They've already done hundreds of thousands in payouts. Okay, so this is why it's so important to be a part of a community that is pushing you to grow. You're seeing others achieve something that you never thought was possible. Okay, so sweep of buy side, tick. Bearish bias, tick. Step number 3 is a shift in market structure between both assets, which will be below the first short-term low. So for ES, it will be below this low. So let's see if we get a shift in market structure. Okay, boom. Shift on the Nasdaq, a shift on ES. So we have a shift on both assets. I'm going to put this center just so we can see it a little bit more clean. Now, step number 4, we need a gap on both assets with the shift. There's a gap on the Nasdaq. Let's mark this out. I'm going to put it in purple because, you know, I always put it in purple like that. And also a gap on ES. That's essential. You must have a gap on both assets, which we do. Now, with the gap, the final cherry on the top that you must have is something paired with a gap. Now, what is the something? It's going to be a mitigation or a breaker block. It doesn't matter if it's on only NQ or only ES. You need it on either asset. You do not need it on both. But in this case, we actually have it on both. Now, this is a bullish order block. Price puts a down close candle and we have an up close candle that engulf the previous down close and a series of green candles. Okay, so this is a bullish order block. Price then took the high after creating the bullish order block and then it inversed the order block. So that's a breaker block. For example, it'd be a mitigation block if we had a down close candle engulfed, so bullish order block, but then we never took the short term high and we just inversed it straight away, so disrespected the bullish order block, closing below it, body closure. It would be a mitigation block. A breaker block is more high probability than a mitigation block, but that's not something you need to pay attention to when engaging or taking a model. Okay, so this is a breaker block. Now we have a fair value gap, which is actually a breakaway gap in this case. You can see price has created a gap and is displaced. So the gap has also caused the displacement, which is a breakaway gap. Now, also on ES, you can see we also have a breakaway gap, which is also paired with a breaker block. We do not need a breaker or mitigation to be paired with a gap on both assets. Only one. And you can see me do this live, you know, this is what we do. So hopefully this explanation is making sense. And then the cherry on the top of the cake, that we was going to take a short anyway. We was going to eat this cake anyway, okay? But ES said, look, ES is the weaker asset. It can't reach London highs. NQ took the high. NQ done the sweep of liquidity and it put in a bearish SMT on ES, which for both assets is a bearish confluence, mostly for ES. We're going to be looking for an entry inside of macro. Macro is from 10:45 to 11:15 AM EST, which you can see 10:45 is right there. We are already inside of macro. We're going to be looking for an entry. As soon as price taps the gap, we will take an entry short. One thing that's very important is a valid stop placement. You want your stop placement above all bearish PDRAs that will send your trade in favor. So this bearish gap, this breaker block, and this order block. So for example, leaving your stop loss at this short-term high, you don't need to run it at this one because, for example, from this short-term high is when the displacement occurred. So you run it at the previous short-term high. This is above all bearish PDRAs that will send this trade in favor. So you can run your stop loss and leave it at 34.75 points. You're aiming for a flat 2-to-1 or the first 1 minute low that gives you a 2-to-1, which for this example, this 1 minute low is only a 1.72. It's not enough. We need a flat 2-to-1. So you are going to target this area for price, 296, and let's see if we get entry. Boom, there you go. There's the entry. So I'm going to tick this back so we know we get an entry. Let's get it more precise. 35 points. 35 point stop. That's going to be 7 micros. 7.1 micros to be exact to risk $500. So in this case, we're trading the mini. So it's going to be 10 times larger result, but let's take it with 7 minis and the result is going to equal close enough to around $1,000 profit. So entry will be here. Short, stop loss at the high, so we're risking 35 points. So as you can see, we're risking 5,250, which on the mini is 10 times larger than the micro, so we're risking on the micro $525, and TP at a flat 2-to-1. So we're going to be aiming for roughly around $10,000, as you can see there. So on the micro, it'd be $938. This is what you're doing on your Apex account, PA. Okay, hopefully this makes sense. What is the overall draw as well, added to this position as well? Things that you should look to mark out. At the New York Open, we have a untouched New York Open low. You can mark that out for price. New York Open low. Very important that you mark these areas out for price. What else should you mark out? New York opening gap, only unfilled. Price never traded back into this area. This is a draw for price. Unfilled. New York opening gap. So these are things that you would have marked out on price. That is very important for price to return back to this area. High probability unfilled imbalances and liquidity points. Let's fast forward price. Okay, as you can see here, price took out the first short-term low. In this case, I'm going to trail to the previous short-term high. Okay, so we've reduced risk from 35 to 16. So now we're only risking $250 instead of risking $500, which is $259 on a micro Apex account and $2,500 on minis. Okay, as you can see here, price actually came very, very close to taking us out. Only a few ticks actually. And this is the exact same scenario as what I had live. Now what we're going to do is use the next short-term low like this, and we're going to use it as a point to trail our overall position. Now, one thing I want you guys to understand, using the fib from TP to break even, you can see that this low is not quite 50%, so we're not going to go fully to break even at this point, but we can use it as a point to trail. So if you ever see on my chart a point labeled TS, it just means trail stops. Let's fast forward price. Okay, so price takes the next low. As of now, I'm going to be trailing my stops only to the previous short-term high. So literally only moving a couple ticks, which you can see there. So I'm moving it just slightly. So now we're risking around 15 points. So as you can see here, we have a breakaway gap and a inversed bullish order block. So this is going to be a mitigation block. Price never took a short-term high and just inversed the bullish order block straight away. So this is a mitigation block paired with a breakaway gap. So in this case, you can run your stop placement at the breakaway gap high. But in this case, I'm going to give price a little bit of room to work, so I'll move stops to break even, which break even realistically in this case is going to be around this area in a live case scenario. So risk on this trade is completely diminished and you're risking $0. Let's fast forward price. Okay, so we just took this low past 50%. Now it's completely break even, but in this case I'm actually now going to trail my stops to the breakaway gap high. Price trades into this bearish order block, which you can see here. Let's mark it out. Up close candle, down close, engulf the up close candle, bearish order block. Price should continue off this area in an algorithmic bearish case scenario. Boom, trades out of the order block, trades lower, TP. 2R, the same trade I took. Hopefully this makes sense. I take this every single day and I've been trading this model for absolutely years. If this video you found was useful, make sure you subscribe to this channel. I drop so much value. I actually change so many lives. It is unbelievable. Drop a comment what you want to see in future videos because I always read the comments and I read as many and reply to as many as I possibly can. If you want to watch me trade live for free, this is going to be ending soon. There's a link in the description of this video. Watch me trade live for absolutely free and join the free Discord as well. There's 2 links you need to click on. They're both free. Until our live stream at the New York Open, I'll speak to you guys shortly. Take it easy, my brothers.